I want to invest my hard-earned money into dividend stocks to earn passive income so that I can one day quit my job and travel the world. This is something that you commonly hear whenever people are talking about dividend stocks. But my opinion is that these people are wrong. So to prove my point, I've spent the last 2 years building up a $60,000 dividend portfolio to really find out for myself if dividend investing was really worth the hype. So hopefully at the end of this video, you'll be able to find out exactly why most people get dividend stocks wrong and how you can do it properly to invest your hard-earned money. So the very first thing that dividend investors get wrong is that many people believe that they can use dividend stocks as passive income so that they can one day quit their job. However, I don't think people really understand how much money it really takes to be invested in the stock market itself so that they can replace a small amount of their salary. That's why I conducted my experiment of going into that 2-year project. If you really want to get a stable dividend stock, for example, in Singapore, you probably look for a bank stock like DBS, OCBC or UOB. This will usually give around 5% dividend yield every single year. So if you wanted to replace your $4,000 per month salary, for example, that's going to be a very average graduate salary when you come out of university, for example, and that will equate to around $48,000 a year. Assuming the same 5% return annually, you will need to invest $960,000, almost $1 whole million in order to replace just your fresh graduate salary without counting inflation in and your increasing lifestyle needs as you grow older as well. Assuming all of you are super frugal like me, if you're watching my videos, you'll probably be something like me. You'll probably be very good looking, you'll probably be very frugal as well, where you don't buy any clothes, you don't do any shopping, and you just go to work and you do YouTube. Maybe you save 50% of your salary, which is $2,000 a month. This will take you 480 months, which in years would be 40 years to save that same $960,000. Will you even be alive to enjoy your money? Maybe. I'm not cursing you guys or anything, but you get the point. It takes damn long to be able to reach that number to replace your full-time job at this current rate. You also probably need more than $4,000 to sustain your life after 40 years, so this really just defeats the purpose nevertheless. However, is everything all depressing now that you know that you cannot use dividend stocks to retire? No, you just gotta tweak your strategy to do the smarter thing. So my belief is that you shouldn't be thinking about using something to completely replace your day job, but instead do something on the side that can earn you a few $100s a month so that it speeds up your investing journey and it just gives you a little bit more money every single month. Because if you can just earn $500 a month through side hustles, part-time jobs, or really anything else, if you're watching my channel, you'll see I have side projects everywhere with all my custom G-Shock watches, doing TikTok, doing YouTube, selling digital things online, all these kind of things can earn you money on the side as well. But if you want to earn $500 a month, that will equate to around $120,000 invested into dividend stocks in order to pay you $500 every single month. So it makes sense to start a side hustle to supplement your income instead, right? How long will it take you to build a $120,000 dividend portfolio just to pay you $500 every single month? It doesn't make sense at all. So take my custom G-Shock side hustle for example. 2 years ago, I got this idea from Stevie Sales to sell custom G-Shock watches online as a side hustle. I was customizing the G-Shock watch bands and selling it for about $50 to $100 per watch. While I was actively doing it, I was earning on average $300 plus a month just doing this side hustle. Although it won't be able to replace my full-time job anytime soon, this amounted to around $4,000 a year in profits. You can literally do whatever you want with this money, go travel to Japan for a full trip, or just be prudent and invest it into the stock market to speed up your retirement. Honestly, I didn't think about scaling that, that custom G-Shock side hustle too much, but perhaps if I put in a little bit more effort and if I was a little bit more interested, and I could scale it up to maybe a $500 to $1,000 a month, things will become really serious. But you get the gist. Do something on the side, or maybe start a side business that can potentially earn you the money instead of using dividend stocks. That is the whole point in that sense. But now that you know that dividend investing cannot replace your full-time job and retire, let's talk about the next myth, which is dividends are free money. People always think that dividend stocks give free money to the investors every year and they can just earn dividends and enjoy capital growth at the same time, which means your stock price grows at the same time and you can sell at a higher level and earn the profits. Sounds good, right? Just earn free money every month and watch your stock price keep rising as well. You get the best of both worlds. You earn money while waiting for your stock to make money as well. Now, I want to challenge you guys to think a little bit deeper. Why do you think some of these companies give dividends and some companies don't? Why do you think the big companies like Apple, Facebook, Amazon and Meta, they either pay no dividends at all or they just pay a very small amount of dividends every year? It's not even a far cry to say that they are the companies that control the whole world because, you know, they sell so many of their products and stuff. You know, we have all the Apple phones, I have AirPods and stuff. You know, Apple kind of rules the world with everything that they're selling. But why do they give so little dividends, right? They're making so much money, they should be able to give as much money as possible to their investors, right? But that's where the catch is exactly. Companies conduct their business and they earn their money through that. With that money that they earn, they can either give it to you guys or us as investors through dividends so that they can appease peasants like us. You know, let me just give you a bit of money, sprinkle a little bit of money on you, and then you'll be like, oh, thanks so much, and then I will just continue investing or stay invested in their stock and, you know, continue having interest. Basically, they're just trying to appease us a little bit, and that's about it. Or they can actually use that money to reinvest into themselves to grow the company itself. That way, the company grows bigger, becomes more efficient, and earns more money, and that in turn boosts the stock price of the company instead. So for the companies that give out a lot of dividends, they're basically stunting their growth, and they will not grow as fast as all the other companies. Hence, their stock price stays relatively stagnant, and it won't increase as much as everyone else. So the more important thing to think about would be calculating the total returns you get as an investor in a year itself. You're likely to be investing for the next 5, 10, 20, 30 years. So your time horizon is to be really, really far instead of looking at the short-term gains of, oh, let me get 5%, let me get like $500 this month. That feels really, really good, but it's not going to be very conducive or productive for you in the long term. Let's say you invest into a Singapore dividend stock like REITs. They typically give out around 5% dividend yield, but the stock price doesn't move much. So maybe they grow 1 to 2% every year. That would be an average return of around 6 to 7%. However, if you invest into something like the S&P 500, you'll be getting a return of 8 to 10% a year. So you're basically losing out on 2 to 3% every year, but if you compound that over a period of 30 to 40 years, that will likely become a few $100,000 that you are missing out, maybe even a few $1 million if you're putting a lot more money inside. So no, dividends are not free money, they are profits that you take out of the company to enjoy your life at a certain cost. With that being said, let's now look at my investing strategy for the future. If you've been following my channel, you know that I was investing into CapitaLand REITs, Ascendas REITs, and DBS Bank stock, as you can see from the screenshot over here. All of them, I've invested around $60,000 total in the last 2 years or so. You can see the overall amount on the screenshot as well. I must say that this was quite an enjoyable experience because it's kept me consistent with investing, and my money has been growing because of it as well. A little bit slowly, but it has been growing nevertheless. It's honestly quite nice when I built it to around, especially that $40,000 to $60,000 sort of threshold. Every time I get dividends, it's always around $500 to $800, which is a lot of extra money to get in a month without doing anything else. Literally passive income coming in. I even hit my all-time high last month with my dividend profits at $1,200, which is awesome for not being able to do any work. However, even though it's been fun, it's time to bring this project to an end finally. I finally sold my position in both CapitaLand REITs and Ascendas REITs. You can see from this screenshot here that I'm only holding DBS right now. DBS is a relatively strong stock in Singapore, and I don't see why I shouldn't continue holding on to it. I'm relatively up on it as well. If you caught my other videos before this as well, you would know all about the Trump tariffs and the crazy things that are happening in the US stock market right now. All the US stocks are down at least 10 to 15%, so I think it's nice for me to rotate my money out of these SG stocks and into the US market for a nice sweet return. This is one of the fastest drops that's ever happened in history, and I want to partake in the US stock market right now. Of course, the stock market can always drop more if Trump decides to do some more YOLO things, but I'm okay to be part of it. If it drops more, I'll just buy more. As simple as that. In fact, I'm really hoping for it to drop more so that I can buy even more at a greater price. That's how I've conditioned my brain to think, like, to get excited when things are falling and to get really fearful when things are increasing a little bit too fast for my taste. Hopefully this video has helped you guys to understand a bit more about dividend stocks and how you should approach investing as a dividend investor. If you enjoyed this video, then you'll probably enjoy this video here on how to invest on the Momo Singapore app. Thanks for watching, have an amazing day as usual, and I'll see you guys in the next few videos. Bye bye.